If you had invested 50,000 in Eicher Motors back in 2010, you'd have over 68 lakh in investments from that stock alone by today. And even more impressively, if someone had invested 10,000 rupees into the IT stock Wipro during the 90s, it would be worth over 10 crore now. These are just two examples of a phenomenon that has plagued Indian investors for decades now, a phenomenon commonly known as the multi-bagger stock. And while people may tell you that finding the right multi-bagger stock to invest in is a game of chance, there are actually tons of reliable ways to predict these kinds of massive growth stocks. And today, I'm going to teach you exactly how to identify them. From simple rules that help you detect changes in the market to the use of professional-grade analytical tools, this is a comprehensive guide on how you can turn your 10,000 into 10 crore with just a few simple steps. And if you make it to the end, we'll even give you an example of a few very promising such stocks in the Indian market today. So without further ado, let's jump in. Chapter 1. What is a multi-bagger stock? Now, while the term is used pretty loosely by most investors these days, the exact meaning of a multi-bagger stock is pretty straightforward. To put it simply, a stock that gives a return multiple times its initial investment value. Or in other words, one that takes one bag of money and gives you 4, 10, 20 or multiple bags in return is the multi-bagger stock. In fact, in this video, I'll show you exactly how investing in just 3 multi-bagger stocks can turn your 1 lakh into a crore in less than 10 years. But before we get into that, we must understand that where there's great potential, there is also great risk. For one thing, multi-baggers rarely give their full output in the short term, and most demand that you hold for at least a decade or two before you start to see results. But more importantly, finding the difference between a grossly undervalued stock that will rise up 20-fold and a stock जिसने अगले 2 महीने में crash कर जाना है is very difficult. But that is what I'm here for. Chapter 2. Identifying multi-baggers and how they work. Now, there have been a ton of multi-bagger stocks over the years in India. There are obviously the ones we mentioned at the beginning of the video, but even more recently, companies like Kaplan Point have gone from being traded at 40 rupees in 2014 to almost 900 rupees in 2021. That is over a 20 times increase in stock value, meaning that someone who had invested, say, 10 lakh in the stock in 2014, their share would be worth well over 2 crore today. And this one is on the lower end of the spectrum, meaning बात इससे भी आगे जाती है. In fact, you don't even need a 10 lakh capital to get into the big C club. Just take Lupin Pharma. Their stock grew from 10 rupees in 2002 to nearly 2,000 rupees in 2015, giving them a return of over 200 times or over 20,000%. And if you're able to find a stock that has a return of a fraction of that, say 1,000%, you will be able to turn your 1 lakh into a crore before the end of the decade. And we actually have some guesses as to what we think those stocks may be. So stay tuned for the big reveal at the end. But before we hand you our guesses, let me tell you how you can find these stocks on your own, which I shouldn't have to say is not an easy task. So after having researched thoroughly and having taken a look at the investment strategies of the likes of Rakesh Laroya and others, here is how you start to identify your own multi-bagger. Chapter 3. Develop a sense of the market. Now, for most investors, knowing the ins and outs of a particular business while having a basic knowledge of the market is all you have to do in order to be successful. That is not the case for multi-bagger investors. You see, the first thing you have to understand is that multi-baggers are not just stocks that rise in value because of their business or management. In fact, more often than not, the thing that is making the stock appreciate in value is not the actual business but the market trends around it. हमने वीडियो के शुरू में विप्रो का नाम लिया था. आप उन्हें ही देख लें. Their business practices, management or model were all things that had been good for years. But it was only when the market started to focus on IT products that the stock fully reached its potential. So before you can learn how to identify individual stocks, आपको पहले market को read करना सीखना पड़ेगा. And it's not like you need a business degree or anything to do that. In fact, as long as you keep up with the news by reading papers and business magazines like, say, The Economic Times, you will have a pretty good idea of what the market is looking like right now. For more specific knowledge, I recommend you guys to build a habit of visiting the BSE every single day so you can see how stocks rise and fall and which ones appreciate the best and in which conditions. Once you've done this for a few months, you will have enough knowledge to safely navigate the world of stocks. And with that, we can turn our attention to Chapter 4, Identifying Market Trends and Triggers. Now, for most stocks, the most you have to do is to find a good company in a good sector, and you can invest right there and then. बाकी आपको प्रॉफिट कितना हो, कितनी देर से हो, वो आगे की बात है. But in multi-bagger investing, you need to maximize your potential profit while also minimizing the time taken to get there. इसके लिए you have to be able to tell when a certain company or market sector is about to change suddenly. The quicker and bigger the change, the bigger the profits are going to be. And this is the tricky part. Because for most people, it is not easy to predict these things until it's too late. But there are still a few good things you can do. First, you have to pay close attention to any big national changes. कोई कंपनी प्राइवेटाइज हो रही है, a sector is getting subsidized, या competition में कोई मसला हो रहा है. All of these things can be triggers for massive market change. But more importantly, things like listening to company conference calls, attending annual meetings, and reading company reports will always help you stay ahead of the curve for when it's the right time to invest. And with that, we can finally move on to finding the exact stock we'll be investing in. But before we move on to that, if you've liked the video so far and are interested in watching more videos like this, please consider liking the video and subscribing to us so we can continue to provide quality financial content to viewers like you. With that, let's move on to the next step, which is Chapter 5, Identify the Sector. The first step in selecting an individual stock is to first select the sector you're going to be investing in. Now, if you've done the first two steps correctly, you'll be able to identify which sector is going to get a massive influx of cash in the coming years. In the past, it has been things like IT, EVs, and most recently in India, a huge rise in the value of agro products. Similarly, the future looks to be loaded with sectors such as AI, machine learning, biotechnology, and a rise in textile and goods for India because of international sanctions on China. This step is more of a loose logic thing than an exact science, but once you have identified the right sector that has A. a huge potential in the future, B. a lack of investment currently, and C. a good amount of well-run companies, then you can move on to Chapter 6, Selecting the Stocks. This is the big one. So as you can imagine, there are a lot of things to consider here. But for the most part, just like we did with the sectors, we're looking for companies that have good resources and good business, but are undervalued by most people and have the possibility to suddenly rise in value due to a certain market trigger. और अगर ये सब आपको बहुत वेग लग रहा है, you're not alone, which is why most people have compiled a list of symptoms that help you distinguish potential multi-bagger stocks. For one thing, they will most definitely be stocks that are undervalued as of now. There's no point investing in an already successful company and hoping for it to be a multi-bagger because they will appreciate normally. And one of the big categories of such undervalued companies are companies that are new or are in new sectors. So start by looking there. Another major factor is a big shift in company management or operation if the company is being transferred to the next generation or a new board of directors is coming into place, or hell, if something as simple as a new advertisement program is being initiated. All are good indicators of a company that will soon become a multi-bagger. But by far, the biggest indicator of these companies will be something that we call the PE ratio of a company. This is the ratio of the price of one share to the earnings made on that one share, and in general, this ratio will always rise before the stock price in case of a multi-bagger stock. So if you see a company that meets any of the earlier criteria and has a fast rising PE ratio, it might be time to invest. Now, finding a stock is definitely a big step. But as anyone who has ever found a good stock can tell you, it is not nearly enough. Because there's also the matter of when to invest and when to leave. Because as we mentioned earlier, multi-baggers take a notoriously long amount of time before they start to show results. This is why when choosing such stocks, it is necessary to keep in mind Chapter 7, the Rule of 5. This rule states that if you have invested in a stock you're confident in, you're not going to sell until you've held it for at least 5 years. You might face some declines or even some major losses in this time period, but just remember, as long as you keep holding, eventually those losses will be returned tenfold. And finally, once the rule is over and your stock is soaring higher than you've ever dreamed of, it's time to talk about Chapter 8, Bottom Line and our guesses. Now first, I promised you guys some potential multi-bagger stocks, and it's time I tell you about them. First on the list is MAS Financial. They are a 30-ish-year-old company catering to lower and middle-class people who have maintained a very strong track record over the years. But due to rising inflation and weakening competition, are projected to rise immensely in the next decade. On the technical side of things, we have Ultramarine and Pigments, a chemicals manufacturer with a robust business model but not enough recognition. But as soon as they get that, they'll rise far higher than anyone can expect. There are also companies like IndiaMart, Lumax, and Indiabulls Venture. all with excellent business models and untapped potential. And while I'm not telling you कि अभी जाके इन stocks में सारे पैसे भर दें, these should be good places to start for you to research and find the right stock for yourself. And that, I think, is the real takeaway here. If you're willing to live with the risk and have the knowledge, patience, and restraint to find and hold these stocks, well, there's nothing stopping you from becoming the next investing billionaire. And that covers our guide on how you can turn a few lakhs into crores before you even consider retirement. And with that, we must pass the question off to you. What are you guys investing for? To generate wealth or to get a steady income? Please let us know below. Also, if you found today's video helpful, you may also find our video on Warren Buffett's 6 necessary rules of investing quite useful. So if you're interested, click on the thumbnail on your screen here. And on that note, we must end today's video. I hope you enjoyed watching it, and if you did, be sure to leave a like and subscribe for more. With that, take care, and I'll see you guys next time.